and welcome. You're watching Your Trades with me, Snehisha, and with me is Priyanka Opal, and you're watching ET Now. Let's take a look at how the markets ended for today's trading session, also for the week, for the month, for the quarter, and for the financial year. Because Priyanka, we finally come to the end of the trading session of the last financial year. So, well, let's take a look at what the moves were like. And for Thursday's intraday session, Nifty did see quite a solid up move, but later towards the fag end of the trading session, the last 30 minutes or so, it did see a sharp fall of more than 150 points or so, but however managed to end Thursday's trading session with almost a 1% uptick coming in. Sensex also did see some bit of a slide coming in, but almost 1% uptick coming in over there as well. Nifty Bank also ended the day with a 0.7% uptick. But let's also take a look at what the broader indices were doing, because remember in the last few weeks that we've been seeing to the end of this financial year, the SMIDs were the basket of stocks that were seeing quite some bit of volatility coming over there. Nifty Mid-Cap ended the day with an uptick of 0.5%. On the other hand, you also have Nifty Small Cap. Small Cap ended the day with just a very nominal positive bias, but flat. So, well, the SMIDs have yet once again underperformed the benchmark indices, but however, they have managed to end this trading session in the green. On the other hand, however, let's also take a look at what the markets have done on the year basis, on the financial year basis. And you have Nifty that is up 29% this financial year, registered the biggest single financial year gain in over 20 years. So, well, that's a very positive trigger coming in for the Nifty. Nifty Mid-Cap up 60% this year, Nifty Small Cap up 70% for FY24, and Nifty Mid-Cap Small Cap have also registered the biggest single financial year gain in over 20 years. Nifty Mid Cap and Nifty Small Cap have also hit record highs this financial year. All sectoral indices have hit record high, barring Nifty IT when it comes to FY24 moves, and all major sectoral indices have ended the year in the green. Realty Index, the top winner when it comes to FY24 moves, 130% uptick over there. Nifty Realty, biggest single year gain as well, and followed by Energy, Pharma, PSU Banks and Auto. So, well, that was largely how the trading session looked intraday as well as for the FY24 yearly basis. But Priyanka, also take us through what else happened over the course of the week.
Absolutely. In fact, you've wrapped up a lot, Snehi, but then what a month we saw. This is the same month where we saw a big slide coming in from the broader markets, but then, yes, what a sharp recovery we saw from the broader markets. Talk about small cap, mid cap. In fact, we've seen gains only, and if you see on a cumulative basis the entire financial year, though March eroded some gains, but the net there are gains for investors, for of course small cap and the mid cap being the biggest beneficiaries. But then what made news today? For sure, there were a lot of QIPs and in fact a lot of fundraising which we saw in last 2 weeks, and today being the day for Aster DM, where we saw $235 million of a block was launched. A lot of block. In fact, yesterday also we saw a lot of liquidity because of blocks, and today was also another day. Angel will also seeks to raise about 1,500 crore via QIP. We did see this week itself Tex Macro QIP was also launched, and of course let's not forget the entire hotel space, and especially talking about Charlotte Hotels, which seeks to raise about 12 billion year also via QIP. So big moves coming in from a lot of sector and stocks, but then let's now find out what the week lies ahead looks like. And in fact, not just the week, in fact, the entire April series also looks like. So we are joined by two special guests. We have Aditya Arora, founder and multi-asset research analyst with the Adlytick. And of course, we have to give us more on the fundamental. We have Ajay Bagga, chairman of Elements Platforms. Both joins us to talk about the market fundamental and technical, what lies ahead. Good afternoon to both of you. Firstly, a quick question from Mr. Bagga. Mr. Bagga, because since we've seen the March was clearly a month where a lot of adjustments happened, financial year cruising, this was a truncated week, and then a lot of tax harvesting. But now what lies ahead for us? Understanding that next week, and since we've understand, what kind of comfort macro factor also gives you. Quarterly gains in terms of US markets surprised us. Now what lies ahead for us? A lot of cues to see from macro factors, and let's not forget big cues coming in from domestic market when BJP also launches its manifesto. What is that you are picking, and how are you gearing for the next week, and especially for April series now?
See, now the immediate catalyst for the markets will be the earnings season. Uh, Politically, the markets have discounted political continuity and stability. It's a matter of numbers, on from 320 to 400, what are the numbers like? But more or less, the markets have discounted continuity. And that, as far as politically, the biggest catalyst will be the July union budget, what comes with that. But right now, what the markets will be keenly looking at is the start of the earnings season, 7, 8 days from now. That will be globally. We are in a Goldilocks environment with good macros, as you defined it. We have inflation, which is trending down, though it's persistent in the journey from 3 to 2%. It's showing some persistence. But despite that, central banks are talking about rate cuts. So if the first quarter was one of anticipation of rate cuts, the second quarter will be one where we'll be seeing imminent rate cuts, either in June or July. The rate cut cycle will start. The Swiss National Bank already cut rates as the pioneer, but I think ECB and Fed moves is what the markets will look at. But overall, global macro is relatively robust. China, I think there is a recovery coming. So by end of the second quarter, you will see an incipient recovery in China. The stimulus working will help out China as well, and that will really boost market sentiments. Monsoon is looking normal. The first initial talks is of a La Nina setting in and covering most of the Indian subcontinent rainfall this year. So that will be a big boost to rural consumption, and we are seeing the consumer stocks moving in anticipation. So continuity, stability, good global macro, good Indian macro, a trending downwards inflation, and on top of that, you heap in rate cuts coming in. I think we have a lot going for these markets in the quarters ahead.
All right, thanks for that view coming in. Aditya, let me come to you and let's get a little sector specific now. Help us understand this move that we've been seeing in the FMCG pack over the last couple of trading weeks, if you could call it. And it makes up 10% of the Nifty. So going ahead in FY25, are you expecting any change in, the moves that we are going to be seeing on the FMCG basket? Any factors such as the rural demand recovery or, summers are here, so maybe electricals could be doing better, but are you penciling in any growth or any major growth, let me rephrase that, when it comes to the FMCG pack for FY25?
Hello, good afternoon. I think FMCG basket or FMCG index, Nifty FMCG is trading at important support right now, which is 54,000. Last time also FMCG basket had taken resistance at 54,000. So polarity comes in picture, and over here a lot of FMCG counters look very good. Risk reward is pretty favorable. And if you look at market leaders like Kolpal, they are trading at 52-week highs. So they're already setting the trajectory for other FMCG peers to follow. I think other counters are also trading at important support, like Marico is trading at important support. Hindustan Unilever also saw a good spike today, and Nestle was also up 2 to 3%. I think from here the risk reward is pretty good, and there's upside of 5 to 10% in these FMCG names, and the downside is restricted. Upside is good enough from here.
All right, Aditya, one very key question, what is, of course, I'm sure on the minds of every trader and investor is, now, what about April month seasonality? What we have seen, historical trend that 6 out of 10 times April month has played out very well. In fact, 10-year average, we've seen Nifty performing 2%, mid-cap and small-cap performing around about 4.5%. Now, give us a sense of what kind of rollovers, I'm sure the data will come in by the evening, but then what kind of rollover data do you see from sectors? And historical data also suggests that metal and pharma can be the biggest gains. Where should actually a trader eye on?
Uh, yeah, absolutely. The data is pretty encouraging. Bank Nifty has seen the rollover stats are pretty higher than what we saw in the last month. It's already the first day for Bank Nifty, and we saw stellar move of 4 to 500 points on Bank Nifty. Although that cooled off initially, but still there's a lot of steam left over there. As Ajay ji was also saying that China could also could rebound strongly, so that would help metal sector. And DXY has been continuously going down. Today also important data is about to release in USA, so the data is expected to be a little bit dovish in nature, as in it could be good for risky assets. It could trigger a risk on rally. Already we are seeing that all the global markets are trading at 52-week highs. Nikkei is trading at 52-week high, although we saw very good depreciation in yen, but still Nikkei is trading at 52-week high. S&P is trading at 52-week high. Dow Jones is trading at 52-week high, and even if China supports, then it could be all engines firing at the same time, and that could trigger a great rally in metal sector. So I think metal sector really looks like the top bet. The charts of all the metal counters are also looking quite good. Hindalco saw a very good recovery. Jindal Steel also saw good recovery. All the metal counters have rebounded quite sharply in last 1 to 2 weeks. Also, I would like to state a disclaimer that we have been suggesting metal counters to our clients. So one must, consult their financial advisor before taking the decision. But overall, I think I'm very positive on the market. I see 23,000 to 23,500 on Nifty, and I see 49,000 to 50,000 on Bank Nifty.
All right, thanks for those levels and sharing your view. But Mr. Baga and Aditya, stay tuned with us as we slip into a short break. We'll be right back on this edition of Your Trades.
Welcome back. You're watching Your Trades. Mr. Bagga is with us, and of course, Aditya also on the technical front. Mr. Bagga, because since you've also mentioned about the corporate earnings, the Q4 earnings, which will be a key trigger to watch out, and we know that Indian valuations have always been steep, and that to be back of the strong earnings. Now, what do you make out of Q4 earnings? Because one part of the argument is this also, that the easy basket buying, which was there from last 2-3 years, has also gone by. We need to be very selective, and earning based stocks will only move. What do you make out of the Q4 earnings?
At near to all-time highs, that is a truism that any earnings miss leads to a much sharper correction. So we are priced to perfection, or maybe ahead of perfection. But we are expecting a pretty good earnings season. The sectors that will really shine up would be autos, industrials continue, capital goods continue to do well. IT, there will be challenges, as we saw with foreign IT companies giving poor guidance. Our IT stocks also got hit. But I think IT is a contra bet. And 2 quarters down the line, it might be a very different situation, especially given the way our IT majors are remodeling their service delivery towards the AI, towards data and machine learning, which were already there, but a lot of AI projects will now start coming. Globally, what will happen is now the wide dispersion of AI into supply chains, into the manufacturing chains, as well as the service utilities will start. And our IT companies will be well positioned for that. It might take 2 quarters, 4 quarters for the market to start recognizing that, but I think the IT sector could be contrabet. Banks, I think, come back, especially the PSU banks. There's a lot of foreign investor interest that is now rising in the public sector banks. So I think banks and NBFCs will again start performing, and you could see some amount of interest. Pharma, you already mentioned. I think pharma is again well positioned. The issue with pharma is the compliances, and one after the other, some FDA or something comes in, and that disappoints investors. But overall, the sector has got a lot going for it. So industrial, capital goods, railway, defense will get the next boost from the union budget again. industrials, infra will continue to do well, and consumption comes back. I'm expecting a better monsoon and rural demand to pick up after nearly 2 years, and consumer stocks are already positioning for that. I think consumption demand will start coming back. Metals, as Aditya mentioned, China will be the big arbiter of metal prices. And I think a Chinese recovery leads to better metal prices, better realizations this year.
So much for that very wholesome roundup answer of all the sectors and the sectoral views that you're holding. Quite appreciated. But Aditya, let me come to you and let's talk about a sector we haven't addressed so far, and that's the realty space. Top gainer when it comes to FY24, 133% uptick coming in on that sector. But even when you look at it on an intraday basis or a weekly basis, you have players, well-positioned market players in this pack, the likes of Soba, Prestige, Macrotech. There is no stopping when it comes to these stocks. Do you think there are more legs left to this realty rally even in FY25? Could you share some levels that you're spotting?
Absolutely. The environment is pretty good for all the industries which are capital intensive in nature and tilted towards infrastructure. Whether you talk about reality or you talk about cement, which is the raw material for infra, you talk about metals, everything is buzzing. And even if you look at Dow Jones, which is an index of traditional businesses, is actually outperforming the new age business. So NASDAQ. So I think there's a new life in traditional business and in infrastructure oriented businesses, and recent commentary from Lodha also says that the sector is very buzzing and there are long legs of rally over there. Technically also, if I talk about DLF, which has the highest market cap, it is actually reclaiming its past glory. In 2008, the stock made high of 1215. Now it's trading at 900. So I think it has surpassed its importance resistance level. So that is coming back to life. And all the newly listed counters or the new players like Oberoi, Prestige, all are making 52-week high. I think there are long legs over there, long legs of rally over there. I see upside of almost 5 to 15% over there. And if we talk about Nifty Reality Index, then it is trading at 900.65. I think from here we can see levels of almost 1000 to 1100 over here. So the sector looks pretty positive.
Clear, because broader market was one such space which made money for both the traders, bears as well as bull traders. From the peak of pessimism, we've already seen a good rebound in small cap and mid cap. But then what lies ahead now? Would you recommend some stocks from this space which can also do well in April?
Sorry, is that
This
for
question
me?
is for me.
I'm sorry, that's for Aditya.
Okay. Okay, so in small cap space, I think APL, Apollo, it's about small caps, right?
In fact, if your preference lies from broader market, well enough. Otherwise, what would be your overall recommendations here?
I think if we talk about overall market, then I would like to go with Reliance Industry, which is actually lifting the market higher. I think Reliance Industries could be bought at this price of 2971.70. Stop loss must be maintained at 2887, and target is 3100 to 3200. Second one I like from pharma space, Ipca Laboratories. This one looks good. There's a fresh breakout on the charts. So Ipca Labs could be bought at 1237. Stop loss is 1180 and target is 1330. And the third one would be Indus Tower. That looks good at 291. Stop loss must be 268 and target is 320 to 330.
All right, thanks for those recommendations for our viewers, Aditya. But Mr. Bagga and Aditya, thanks so much for joining us today. We'll have to let you go on that note. So thanks a lot for taking the time out and joining us. But viewers, with that, let's get a move on and listen into some market experts that we spoke to over the course of the week. And let's go across and find out the sectors that Vikas Khemani, the founder of Carnelian Asset Management, is bullish on. Listen into what he had to tell us.
5-6 segments which we are very bullish, but new segments will come: pharma, defense, auto component, EMS. You will have even chemicals. So each of them will, even textiles. So these are 5-6 segments which will become very big. An example again like to give is that, so let's say pharma industry, let's take for example, the total industry size is about $50 billion. Total market cap today is $200 billion. This $200 billion in last 20 years has grown at 18x, right? And many companies in that period has become 100x and 200x. So a sectoral growth wealth has got created. This $50 billion, by the time Amrit Kal ends, will become $450 billion. It means pharma itself would have a market cap of $2 trillion.
All right, viewers, with that, it's time's out on this edition of Your Trades. Thanks so much for taking the time out and watching.
And let's not forget, Snehi, when we meet in the new financial year now.
So wishing all our viewers a very happy new financial year, we can call it that. But thanks so much and stay tuned to ET Now.
If you like this video, then like, share and subscribe to ET Now.